Hi, everyone. This is Mike Maloney, and Adam Taggart is joining me once again. Adam, how are you doing?
I'm doing great, Mike. Great to be back on your program. Happy New Year. It's the first time I've seen you in the new year. You look great.
As you do also. So, what have you got for me in this episode that we're doing, this video?
Well, Mike, I'm happy to say I think we've got some good news here on the sound money front. So there are two articles out about some advancements that are being made in state legislatures to try to, basically accelerate the process of making gold and silver real legal tender again, which of course they always were since the signing of the Constitution, but we've sort of fallen out of the wisdom of what the framers put together for us.
The first article is about establishing a depository in Tennessee, right?
Right, and it actually follows the success in the state of passing a full sales tax exemption on precious metals. So this is, beginning to be a next step that Tennessee is taking. They're trying to build some momentum here, which is good to see. But yeah, this one is all about establishing a depository where the state and individuals in the state can, keep their precious metals safe.
So they're establishing a depository, and they've already made it. They've already had a legal tender act exempting it from sales tax because you can't tax the nation's money. And the second article brilliantly points out that any gain that you made is denominated in Federal Reserve notes, and they do not call those money, which is great to see people starting to differentiate between national fiat currencies and real money. Money has to be a store of value. Anybody that calls the US dollar money doesn't really know what they're talking about. They don't know the history of it and how our constitutional money was replaced with this national fiat currency. And if you look at the old bills, the old Federal Reserve note, when they first came out with them, said that they were redeemable in gold or lawful money. And what was lawful money? That was a U.S. Treasury gold note. And so it was saying that this is a Federal Reserve note, an IOU, for money or a lawful promise to make money, to pay money, which means that the Federal Reserve note was not lawful money, and it wasn't money. It was a IOU. So another thing that I noticed in the first article on the Depository Act, the author here, J.P. Cortez, correctly refers to Roosevelt banning gold in 1933 as a gold expropriation. He doesn't call it a confiscation. Anybody that says confiscation is trying to sell you some overpriced collector coin or something. They're trying to scare you, because it was a request for the public to turn over their gold coins or bars. It was an order because it was under a penalty of $10,000 fine or 10 years in prison if you retained them. Only, I can't remember what the percentage of, but more than 70% of the gold coins in circulation stayed illegally in private hands.
They got lost in a lot of boating accidents, I heard. Yeah, exactly.
And so, but Cortez did not. Most people, they used to say confiscation, and that's just a way of instilling fear in people so that you can sell them some overpriced collector coin or something, or keep them from buying gold. So it's great to see these two trends of people starting to recognize that the Federal Reserve note is not money, that gold and silver are money, and states are starting to recognize it here. So Tennessee has already made legislation considering it money and therefore not taxable, because if you've got 100 ounces of money and then you sell 100 ounces of money in the future and you sell it for twice as many Federal Reserve IOUs as you bought it for, you didn't actually have a gain in money. And so That's the reason they're getting rid of state tax. Now, if we could only do that federally, this would be awesome. This is
right, but it's got to start. It's got to start somewhere. And there's a couple of interesting points along those lines, Mike. I want to just dig into with you for a second. So, this first article, which is about Tennessee, they've created this depository. And first off, part of me says, look, I'd much rather store my personal bullion with a company that I trust than putting it in the hands of any government, just the way the government tends to run things federally or at the state level. But I really would say, look, if you live in Tennessee, if I did, I would put some of my bullion in there to support this, right? I mean, I'd probably keep the majority of it at a place like, GoldSilver's storage solutions or using InstaVault or whatnot. But I would take some of my capital and put it in here just to show support, because these are the type of solutions that we want to see going forward. I've got one more thing to add to that, but I'll pause for a moment, Mike, because I'm sure you want to make a comment on that.
Well, the comment of the government getting involved, this thing requires that the reports from the depository be audited and then go to the government for the annual reporting in their government records annually, and read by the treasurer and so on. So this is, it's great that we're seeing this transition towards sound money. And I wrote about this in my first book, that, gold and silver have always won throughout the centuries, and they either win through a technical knockout, which would be where we go back to gold and silver slowly through this process of legislation, and our currency becomes money once again, or through a just a knockout blow. And if, for instance, when a country goes into a hyperinflation and goes then back to gold and silver, something that actually does store value over long periods of time. There's, if somebody says the dollar is money, ask them, is one of the definitions of money, is one of its attributes that it has to store value? And if they say yes, ask them if there's inflation. And if they say yes, well, aren't these two things, the dollar being money having to store value, and the fact that there is inflation measured in dollars, aren't these mutually exclusive ideas? I mean, that just proves that the dollar is not money.
Right. Oh, very well said. Well, one of the things money related that I also like about this depository solution, or at least that's catching my attention, is I want to read this this paragraph here, because they're basically enabling the use of gold and silver as real money. It says, using a depository account, citizens could also engage in transactions using gold and silver electronically. An account holder could make a purchase and pay the seller by transferring precious metals to the seller's account. The funds being transacted could also be converted to Federal Reserve notes and deposited into an account at a typical bank. But basically what it's saying is you and other citizens can keep your bullion in the depository, and really all that's just switching is the ownership of those ounces as you engage in a mutually agreed upon transaction. I mean, that's really kind of combining the best of modern technology with the age-old benefit of precious metals as a form of currency and true money.
Yes, it's quite wonderful. It just makes me start thinking about filling out a tax return, and you're getting a payment at a certain price per ounce, and then you make a payment at a different price per ounce of the same ounces that you received. And hopefully people will do this enough to where it becomes too much work for the government and they make some sort of concession on this. It is important to have some sort of store of value as a medium of exchange that can't be instantly typed into existence by any entity, any bank or government, and that is basically beyond their control. It's a very important thing for freedom and for prosperity.
Well, and I think what's great about what we're talking about here, Mike, is it really does seem like that type of thinking is beginning to catch on here. So this second article, which was about what's going on in West Virginia, is that a delegate there has introduced House Bill 2333, which is called the Legal Tender Act. And this basically is being done to establish gold and silver as legal tender in West Virginia. It wants to create a tax credit for the use of gold and silver in West Virginia on state taxes, right? So it's trying to give them credibility again as a form of payment to the government. This is similar to laws that have passed in Arizona, Utah, Wyoming. It says that similar acts are also being considered in Idaho and Oklahoma. So this is beginning to spread, which is great. But one of the things I really liked about this is it talked about the kind of nonsensical logic of having to pay taxes on precious metals on what it calls imaginary gains, right? If the price of gold goes from one price to another price, what's really driving that at the end of the day is a loss of the purchasing power in the Federal Reserve notes that it's being priced in. And basically they're saying we shouldn't have to be taxed on that. You know, there's no commercial aspect to that. All it's doing is holding value while the underlying fiat currency is being debauched. That's imaginary. We shouldn't be, there's no value creation in that. You shouldn't be taxing us because of that. And I think that type of logic really powerful. Now we need more people to be thinking that way, but that's exactly the kind of mind shift I think we're hoping that more legislatures begin to adopt.
Yes, and I love the way they phrase it, taxing imaginary gains and so on. They're using economics as the logic behind this. And, you know, not only are they, if they're going to tax this difference, and the difference is really caused by the loss of purchasing power of your Federal Reserve notes, then they're taxing a loss, which, you know, it shouldn't be legal for them to tax a loss of purchasing power. They're actually taxing a theft, because when the Federal Reserve creates new currency by typing it into existence and purchasing an asset to get it into circulation, when they do that, that's theft. They have just stolen purchasing power. And then you pay tax for them stealing purchasing power from you.
Right. It's a twisted, perverted logic.
Yes.
So anyways, it's nice to actually have some positive stories about legislators showing that there are a few, at least, that are beginning to get the thinking right, at least exhibiting the type of thinking that we'd like to see. Now, maybe on the other side of the scale, Mike, we'll go into the tweet of the day today here.
Well, I just want to mention before we go there, at the bottom of the article, South Carolina, Mississippi, Missouri, Alaska, and Alabama are just a few of the other states fighting their own sound money battles in 2023. So, you know, I used to give a presentation. I started giving these back in 2009 about the death of the global dollar standard and that it was coming someday. We're seeing, I mean, here you've got these two states plus 1, 2, 3, 4 other states in 2023 with these bills. So you've got 6 states joining this party that has been gathering momentum. I mean, Texas has been through this, in Utah and Idaho. There was a bill. I don't know if it passed, but it's just interesting, the momentum that is gaining here.
Well,
so,
that's a very important point. Now, I'm glad you stopped on this, and Mike, you know this more than me, but you know, history shows it's not that the head of the Treasury wakes up in the morning and says, "Oh, I think we're going to switch to a new monetary regime." It's basically kind of a grassroots rebellion that starts at the base of the pyramid and then has to work its way up as it reaches critical mass and you know, gets enough momentum to challenge the power structure. So what you're saying is we're beginning to see the predecessors of that type of movement happening, or the precursors.
Yes, right. And you know, that leads us into the tweet. I received a text recently from, I don't have my cell phone handy. I wish I did. I would look it up, but of somebody that's sort of in on cryptos, talking about the CBDCs are coming and that they're being tested and they're going to be partially gold backed. And I think he was misinformed I don't think that they would try to partially gold back them, because if you go to the Federal Reserve's H.4.1 release, this is their balance sheet of the condition of all the different Federal Reserve banks and the Federal Reserve system. And at the bottom, it shows currency in circulation and what backs it. And the vast majority is U.S. Treasuries. And after that is some mortgage-backed securities. But pretty much all of the nation's gold was loaned to the Federal Reserve after the gold nationalization in 1933 and the revaluation in 1934. $100,000 gold notes were printed up by the Federal Reserve. They gave the Treasury the gold notes. The Treasury gave the Federal Reserve the gold. There's a little bit of it left for the mint, but I can't remember what the percentage was. I believe it was over 99% of all of America's gold is in the hands of the Federal Reserve, and on their balance sheet, it backs the actual physical paper notes in circulation. So if we went to fully gold backed for those paper notes today, it requires a price of almost $8,000 per ounce today to make each note fully redeemable. Now, the CBDCs are supposed to replace the notes. And so this rumor, I think it's a rumor, of the CBDC Fed dollars being partially gold backed. If they are, I want to know how to redeem them.
Right.
I would rather give me the gold, thank you.
Well, it's so interesting on the CBD side of things. You and I have talked about this in the past, Mike, and thinking like a central banker for a moment. Who wouldn't want a CBDC as a central banker, right? I mean, it makes life so much easier, and it gives you so much more control and visibility. Just think of the percentage of the U.S. economy right now that is dark to the government, just all cash transactions. All of a sudden now you know exactly where every dollar is, and you can tax every transaction in real time. I mean, it's literally a wet dream for a central planner. And it looks like obviously lots of countries around the world are already pursuing this, and China's been out of the forefront testing theirs. What's interesting is, so first off, I can easily see central banks wanting to launch their own CBDCs. Honestly, I think they would want to resist for as long as possible having to back them by anything, because that's one of the benefits of a fiat currency is you can print up as much of it as you want. It's even easier to do that with digital currency than a paper-based currency. So I think that's sort of first question is what's going to force any particular nation to back them by give them some sort of hard backing. Now, there's a lot of talk about China and maybe an Asian cohort of nations putting together some sort of hard asset-based currency priced in gold grams. Russia, there's been a lot of talk about backing the ruble. And maybe that's a reason, right? Which is, hey, if China really wants to try to wrest control of the world reserve currency away from the dollar and start taking some share there, maybe it's got to do something like that to just look much more attractive in comparison. So I can see that. I don't see the US going to a gold-backed system except under a complete kicking and screaming scenario where it's just seems like it's the last tactic it has to use to protect, whatever it can of its reserve currency status. Do you think similarly, or do you have a different opinion?
No, I think that's the U.S. does not want, no country really wants to do it, but the first country that does do it will have an advantage, and it'll cause the rest of them to, drop. It'll be like a domino effect, because if you have sound money, that means, and this is money, not currency. If you're using money, then inflation goes away, and people would rather put their in the investments, their own wealth into an economy that is stable and where you can predict where your wealth isn't subject to. One of the great things when the world was on gold is all of the currencies were pegged to each other through gold. And so you didn't have all these wild swings in exchange rates, not knowing if you invest in in Swiss bonds, or if you invest in a company in China or whatever, you don't know what you're going to get back in the future because of the wild exchange rates. You can't even begin to calculate it. You've got this X factor, this variable that is just way beyond anybody's control, and it makes it difficult to do business. This is one of the things that has slowed. People don't realize that we do live in a modern dark age because you don't have a basis for comparison. But every time they create a law or do something that prevents transactions from happening, or limits the amount of prosperity that we have, you can't go back in time and fix that transaction. And all of tomorrow's transactions are reliant on today's transactions, just like today's transactions are reliant on how much you made from yesterday's transactions. You have to have some sort of medium of exchange to make future transactions, and you make those through the transactions that you're making today. And so it's something that goes throughout time and grows exponentially, prosperity. And you can't go back in time and repair a transaction that didn't happen. And so this fiat currency regime that we've got, with constantly changing exchange rates and values, makes this calculation of profit, potential profit and loss when you're investing, very, very difficult. And it opens up another door in the finance world where there's a bunch of people that can get rich through this zero-sum trading of fictitious things that don't add anything to the real economy. They're not making a product or a service that you would buy. So all of that energy is getting sucked up, and they get to ride. So they're not riding for free. They have to put effort into doing this, but it's effort that is being wasted on something that is non-productive.
Right, it's parasitical.
Right, and so we do live in a modern dark age, and people don't realize it, that we could have been so much more prosperous by now, but we're not. And it's part of the blame lies right at the feet of fiat currencies.
Well, I totally agree. And currencies are what you basically exchange the value that's being created by the economy, and that's what currencies allow you to do, is basically distribute that value in ways that hopefully are more efficient over time. But what's interesting is when we look at the economy right now, and I want to move here to the chart of the day if we can, Mike. We're basically seeing an economy that is slowing hard, and by several measures, even contracting. So there was a chart out today about the Empire Fed manufacturing survey, and maybe you might want to comment on that, because that data is not looking good.
Yeah, well, the Empire State Manufacturing Survey, produced by the New York Fed, is a survey of New York manufacturers, and they respond to this survey. I believe it's every month, and it has crashed to a very low level, one that it hasn't been at since the global during the COVID crash. It crashed even further than the global financial crisis of 2008. But we are down at GFC levels, the global financial crisis levels, right now. And that is bad news. Now, I actually went to the Fed's website and looked this up, and the same graph that appears in the at the beginning of this Zero Hedge article is also produced, but they have another line on the graph that is the predictions of where we would be today, made 6 months ago. So with each survey, they're saying the manufacturers are answering how it is right now, their business conditions right now, and what they expect them to be in 6 months. And what's interesting is they always project a rosier picture, because it's almost an identical line raised by several points. But they really were not expecting this sudden crash of the manufacturing sector that we're seeing here. Now, this is a survey of New York State only. But it tends to
reflect.
Something that reflects the entire nation.
Yeah, and I want to add a couple of things to this, because this was a sharp decline over the last period. But if you look at the chart, it's a trend, right? It's a trend, basically that started kind of near the end of 2021, and we've been in decline ever since. So, you mentioned that we did dip below this in the COVID crisis, but it was a really short dip, right? And
that wasn't a trend, right?
Right, that wasn't a trend. This is more like 2008, right, where we slid into this thing and we were stuck in it for a while. So this is still continuing to fall. And I also just want to mention a couple other supporting data points, because this isn't just one. We're not just seeing this in one data set. So the Institute for Supply Managers, the ISM PMI, the Purchasing Managers Index, that contracted in December for the first time since May 2020. So we're seeing another sort of crisis indicator there. And like I said, that's contraction. That's not slowing growth. That is now actually negative growth. And in parallel with that, data just came out the other day too, showing that real wages for employees has fallen for the 21st straight month. Right. Wow. So we're basically seeing economic activity slow down or contract. And we're seeing all along the way that the worker is just getting a worse and worse deal as this is going on. So these are not indicative of a healthy economy.
Yeah, I want to add there, just for clarification for everybody, that if real wages are falling for how many months did you say?
21 straight.
21 straight months. Now, if you have inflation and you don't get a raise, your real wage is falling. So a lot of this is due to the inflation that the Federal Reserve created by expanding the currency supply by 40%, starting with the pandemic. And then they want to blame it on everything else, supply chain issues and all of that. These are things that the governments around the world caused with lockdowns, but they are only the trigger. The inflation is from the Federal Reserve. They created it. It is their responsibility. Now they're trying to act like heroes by raising rates, but what they're going to do is I think we're getting very close to something breaking, and it'll come out of nowhere, just like the global financial crisis came out of when Alan Greenspan was raising rates, he didn't think he was going to break the economy. He turned it over to Ben Bernanke, who kept on raising rates, and they were doing it very, very slowly, measured, careful. This time we are recklessly slamming rates up at the fastest rate in history into the biggest bubbles that have ever existed. And so for anybody that wants more information in that, my last two videos of last year really cover the scale of the bubbles. And so I really feel like we're getting closer and closer to something breaking because of all of this. And when
I agree with you, Mike, as do, my day job is interviewing, economists and institutional investors and market experts, all day long. And I would say the vast preponderance of them are in agreement with you on that. And just to underscore that it may even be worse than what most people are thinking, to your point, the plight of the worker is being caused by the inflation that the Fed and Congress jointly created with the ridiculous trillions of stimulus that they pumped into the economy post-COVID. But nominal wages have been growing the fastest that they've grown in decades. And yet they're still losing ground enough to be negative on a real basis month after month, which shows you how bad the inflation problem that was created is.
It reminds me of the White House claiming that that Social Security recipients have gotten their biggest boost. And somebody goes, well, that's just because it's adjusted for inflation. That's part of the, it's mandated. And so the administration didn't actually do anything, but they wanted to take credit for the boost that was caused because of inflation.
I got to say, how it's harder to get more tone deaf than that.
Yes.
All right, Mike. Well, look, now I understand, as usual, you've collected a great meme here to end the conversation with. Why don't you tell us about it?
Yeah. If you, and, I used to get a lot of heat when I would mention Elon Musk or Tesla in any of my videos, but I've owned Teslas since my 2010 Roadster. And I'm a big fan of the efficiency that Elon Musk has been able to create in his businesses. If you can fire 75% of Twitter's workforce and it works better, imagine what you could do with the federal government. Thank you very, very much. We'll see you next time, Adam.
Always a pleasure, Mike. Thank you.